Hello? Huh? Insurance? Oh, no need, I have a lot. Thanks.
Pauline, get ready!
Okay, coming! Hello Theotians, welcome back to my channel. I'm Pauline the Lao Chiu, and our goal is to help you take care of yourself and your loved ones. Life can surprise us, and having the right protection in place can make all the differences when things take an unexpected turn. And that's where our guest today comes in. She's here to shed light on the world of protection and help us navigate the path to financial security. Jeannie is not just an expert in financial protection, but also a mom who's been through a lot and knows her stuff. She has gone through education to finance and believes that having the right protection and financial know-how are important, especially for people like us who have families to take care of. Let's welcome our guest for today, Jeannie. Hello, thank you for coming to the Lao Chiu channel. Yeah, she's just chill, okay, not loud. Yeah. Right, so how long have you been in the financial industry, Jeannie?
I've been in the financial industry for about 3 years, and I must say it's because of a course that I attended, which was taught by you. And then I realized that financial literacy is very important, and it starts from the basic. Like you say, before you start investing, your basic foundation must be actually done properly. And I was like, what's that? Nobody actually mentioned anything about that. It was not taught in school. You could have a degree, first class honors, all these, but financial literacy was never really taught in detail.
I understand previously, before being in the financial industry, you were a teacher.
Yes.
Yeah, teaching which subject?
I was teaching for about 7 years, and I was teaching full art. So I actually graduated in a degree of fine arts, and then I went into finance because I didn't like not knowing what I don't know.
Yes.
And my financial, my investment knowledge was based on what my mom said. Buy. Okay, then I buy. Time to sell already. I don't know what I was doing. Okay. And then the worst part is, they tell you when to buy, they never tell you when to sell.
Oh, yes.
Yeah. So you say, 掉了，你有没有卖哈？没有。What's happening? 哎呦，加辣了哈。So I was like, oh my gosh, I cannot invest in the long run just hearing what others say. So I decided to go and learn, and I thought that that was the best thing I did. And now I moved from art, I would say, to the art of finance.
Art of finance, yes. I would say I was taught this by when I attended the investing program, that investing is both a science, all right? So we know there's actually the calculation, but it's also an art. Yeah, right. You can continue to stay on as a teacher, all right? But why then switch so drastically then to the financial industry, becoming an advisor?
Yeah, so actually when I delved deeper into the financial studies, right, I realized that a lot of people around me didn't know how to manage their finances. Okay, including my own family, myself. We were going through certain difficult times, and I asked myself, hey, why is it that we've been working for so many years, but our savings never grow? And then our investment also never really grows. So I realized that a lot of people are saving for events. Once that event hits, it wipes out. And then they didn't know how to make their money work for them, which was why I went to study the investing course. I realized that, hey, your foundation needs to be done properly first. Otherwise, what happens is, we call it a financial triangle, right? If you go straight into investing and your financial protection is not covered, what happens is you'll start to liquidate your savings, your assets, your investments, just to fund the part which you should have done. Yeah.
Just now you mentioned about the investing triangle. Maybe you want to explain a little bit more? What do you mean by that triangle?
So it's always like based on Maslow's hierarchy of needs, right? So the very basic are your basic needs, right? So your daily food, your drinks, your living needs. So all these have to be settled, and then after that will be your protection. So what's your protection? Like you said, your 6 months expenses, savings, that's very important. And then also your insurance. Yeah, and then followed by savings, then investments. Because investments can have the riskier ones. So we always want to create, like what you say, the safety net. It is like promise-based and risk-based. You need to have a mix of both. You cannot just all go into risk-based, because we always say, what if your plan A doesn't work out? Then you have nothing to fall back on.
This is the key thing I used to always advocate when I share with people about investing strategies. So the number one thing is not just to look at how much money I want to make before we make that first dollar. Actually, it's very important to make sure that we take care of our downside. Once we take care of our downside, the upside will take care of it by itself. That's the reason why today we have this part of protection, because it's a case of during the time, let's say, there's an economic crisis, and that's where retrenchment is always on the high. And what if at a point of time, you did get a job, right? Or you lost a job. And during that moment, you might say, Pauline, I have to sell my investment away. I've got no holding power because emergency arises. So you got to ask yourself this question. What are the type of emergencies that we would have? I mean, most often than not, it's always probably illnesses, or hospitalization. I think that is probably something we're really going to take care of at a very basic level of protection.
Usually, I would say it's the main two. The others are maybe it will be our parents. If our parents actually didn't plan for themselves, then that's when we have to come in.
Yeah. So I think the key part is this, planning, right? If you fail to plan, you plan to fail. So a lot of times, look back at what your emergencies are. I believe it all boils down to planning. So if we have done our protection well, so this kind of let's say touch wood, accidents do sometimes happen, you are being covered. Sometimes people come to me and say, oh, but you know what, I didn't expect myself to lose my job, and right now I've got to pay for my children's education. My daughter is going to the university, next month or a few months later. I always say this, well, your daughter going to university is not going to happen overnight. So all this really has to be pre-planned. So the next question I may have to ask is, we all know the importance of insurance, but how do we know which ones to get? So every time when the financial advisor comes to us, it seems like it's always inadequate. I mean, they need to make a living. They want to so-called sell us something, but we need to know ourselves whether we should be getting it because it should be on a need basis, right? So how do we assess that?
Okay, so there's this very simple thing that you can just base on. I always say it's based on the 5-finger approach. Okay, so it's like if given a choice, would you want to protect all your 5 fingers? Yes, right. So if you lose 2 fingers, how will you feel?
Then I still need to read out my 3 fingers. But it depends on which one.
So basically, insurance, you just remember 5 fingers. What are the 5 things? First is your hospitalization. Okay, next is the personal accident. These 2 are the must. After that, we'll look at the early critical illness and the critical illness, and then followed by total permanent disability and death.
Oh, okay.
Yeah, so usually I will assess based on this, but depending on the individual, they might not, certain things like death coverage might not be so important for them because they don't have any dependent. Yeah. No one needs their money. They're like, why do I need to cover so much?
Yes.
I'm not going to leave for anyone.
Yeah.
So like you say, it's a needs base. And then also when we assess, there are some things that we have to look at it. Like for example, if you bought your critical illness plans very, very long ago, okay, like, oh, my mom buy for me one. Then without looking at your portfolio, I can say, you don't have your early stage covered, correct or not? And then they're like, yeah, because early stage was something that came about pretty recently.
Yes. How do I know whether currently this plan is suitable for me or not? What should I do?
Okay, so it depends on your life stage. What are your priorities? So we need to assess a few things, like anyone is dependent on your income. So who do you need to protect? What are your liabilities? And then what are your major concerns? And also what are the gaps, basically what you have already planned, whether it is achieving dollar efficiency or not, whether the whole life plan still makes sense, or let's say if you have no children and you don't intend to have, then do I still need this whole life plan, or is it better to go for a term plan? So it really depends on the individual's current stage of life and needs. So all these, one might be good for one, but it might not be good for another. So there is no one size fits all, which is why a lot of people want to DIY, they want to go online and find their own policies, they're price sensitive, but end up they might not buy the right thing for them.
Yeah. So this is the common question, like, what is your budget? Does it really work that way?
For me personally, I don't subscribe to the budget. I will look at your entire portfolio and I will play more of the teacher role. Being a teacher for so long, we actually facilitate the entire process where we will ask you questions. Budget always comes later because it is not about the money. It's about planning adequately. If you tell me a budget and then it falls short, and then you will come back to me and you say, hey, why is it planned like that? Or because you asked me to plan based on your budget. So first and foremost, I don't plan based on the budget. Because who is the best person to tell you what's your budget? Actually, it's me. Because we'll do cash flow needs analysis. So we'll work out your cash flow. So then there's 2 parts, fixed expenses and discretionary expenses. From the cash flow, we will see whether you have budget or not. Because some people give the budget, but we're not going to the market to go and buy veggie or what. No, this is your protection. So it is based on your liabilities, based on what you need to have covered, then it is actually proposed to you.
What are the common mistakes that laymen like us we would have made when we meet with a financial advisor or when we think about buying insurance or protection?
Okay, so common mistakes, or I would say it's a personal choice, would be like they think they're very young and then they won't fall sick. Yeah, so they were like, I will usually ask them, can you guarantee you will never fall sick? You know, do you know when critical illness will hit you? So young people fall sick too. We have seen that, and also children also have critical illnesses. They can have critical illnesses as well. So it hits anybody. It doesn't just hit the older people.
Yeah.
Actually, for critical illness protection, we call it income protection because you're not protecting the critical illness. You're protecting your income. Correct?
Okay.
Yeah. So sometimes they say, you know, housewives, my wife is not working, so she don't need CI protection. Then this will actually protect the husband's income. Because if the wife falls sick, who has to take care of her?
Yeah,
The wife. So the question is, whose income are you protecting? And then the next thing is, how much is enough? That's always the magic question, right? How much is enough? Like you said, it's never enough. It's never enough. So I always say, you know, those who actually come and have done a proper review with me, the next few years, unless their income increases drastically, they don't need to see me again. Yeah.
Okay.
Or unless, like you said, finances are tight, they have a budget, then we will check off the most important ones first. And then we'll move in stages.
Alright.
Okay, stage 1, we must have this set in place. When your cash flow improves, you know, then we can move on to wealth accumulation, then acceleration.
So when we talk about this thing on protection, these are the common mistakes probably people would have thought. They never thought, of like, I would fall sick, but that's what insurance is about, right?
Actually, another thing to note is that, you know, insurance is the only product that gives you future money that was never made, never accumulated. So I always say, you know, the young ones, they will tell me, oh, I do my own investment, you know, my ROI is so and so. I was like, yeah, it's very good. I'm so proud of your results, you know, but, you know, is it sustainable? And how long will it take for you to reach your 1 million? So investments and savings take time to accumulate and grow. But insurance is the only thing that gives you future money that was never made, never accumulated.
Okay.
For example, you can invest in X company, your ROI can be 20% every year. Very good, right? But you know, how long will it take to hit that 1 million? And depending on how much you start. So insurance with the same amount, if you put it in, 2 years later you come and tell me, hey Jeannie, I fell sick. Immediately the insurance company gives you $1 million.
Right now, with the medical expenses, there will be times we may need that $500,000 or $1 million to cover our expenses if we fall sick, that we are unable to work. We still have a family to support, especially in our age group. We have the older generation and the young. Even our PM during this year's National Day rally that, like, you know, give a new term called the young seniors. And this is really, we are in the sandwich group. Not just those in the 50s are in the sandwich group, those in the 40s are as well, because we have aged parents. They may not have a chance to buy insurance and they have huge, probably, medical expenses which we need to take care of. And right now, if there is a chance, we may not want to make the same mistakes that our parents or grandparents have made. So we should start. So what are some of the common myths out there that you want to demyth right now in the about insurance and protection? Yeah.
Insurance buy already cannot claim. Okay, that's the one myth. Okay, and when I review, you know, it's very common. They say, "Oh, Jeannie, I have a lot of coverage. Really, you know, I'm paying so much." And then they're like, "Oh, okay, never mind. You need to let me see, so I know what is your so much. I have 1 million coverage, you know." Then I said, Then I'm like, "Great, let me see." So eventually, when I see, I'm like, $1 million worth of accidental death policy. So a personal accident policy has a $1 million coverage. So that kind of coverage, yes, $1 million, but only on accidental death only. So the thing is, people don't know what they buy. They thought, wow, cheap, cover a lot, very good. But they didn't know what they were covering for. So I told this person, I'm like, yeah, it's only claimable upon accidental causes. You know, critical insurance, critical illness, all these not covered. Yeah, so it really depends on what you bought. So let's say if you bought a disability policy, you know, it only can claim, for example, the Care Shield. You need to fulfill 3 out of 6 daily activities that cannot be done, then the claims will pay out. Correct. If you only hit 1, can claim or not? Cannot. Yeah, so if you hit 2, can claim or not? Can, if you bought the enhanced one. So then what is it? You know, I always go back to the doctor has to write down exactly. It has to come from the doctor. Then, you know, then we will pay out the claims accordingly. Yeah.
So hearing what Jeannie has said, I believe you are just like me. Wow, so many things involved, right? First, I need to understand the 5 different type of plans. Then the next thing is this 5 is not just myself, but also let's say if you are like me having a family, so probably you need to think about your spouse, your partner, your children, your parents. So if each person times a 5, right? So how many do you have to plan? It's always the case that when we come to financial knowledge, it's like the more we know, we realize the more we don't know. And the more we listen, the more we hear, the more so-called this word blur we get. So if right now you are kind of like, okay, I know the importance of insurance, but I'm totally confused. What should I do next? You might want to come for the next episode. Yes, because we are going to dissect for you what should you be doing, what are the steps to take, how should you do that kind of calculation, what are the nuts and bolts about getting insurance, protection or investment. There are so many schemes and plans out there. Which are the ones suitable for you? If you find this helpful, show your support by hitting the like and subscribe buttons. Share your thoughts in the comments and let me know what else you want me to cover. Remember, it's all about taking care of your body, mind, heart, and wallet for a happier and healthier you.